It turns out the easiest way to almost double your net earnings in 3 months is to just play a massive game of chicken with foreign steel dumpers. Welcome to Earnings Unscripted, folks. Today is April 28th, 2026, and we are looking at Q1 results from the American steel giant Nucor, ticker NUE. So, Miro, last quarter felt like a serious hangover for them, but this is, quite a reversal.
The hangover is definitely gone. They booked $743 million in net earnings. That is up 97% from Q4 and translates to $3.23 a share. That easily beat the $2.82 expectations. Revenue also jumped 24% to $9.5 billion. So the fundamental engine is clearly running hot again.
And the market had absolutely no idea how to price it today. Before we get into that weirdness, just a quick reminder for everyone listening that this is not financial advice, just our personal opinions. But looking at the tape, the stock spiked after hours, gave almost all of it back in the pre-market, and then ended the day up over 5.5%. Just a really choppy reaction.
Yeah, the trading was chaotic, but if you look under the hood, that intraday recovery makes sense because this wasn't just... Actually, let me rephrase that. It wasn't just a cyclical volume bump. It was discipline. At the bottom of a pricing trough, steel mills usually panic and slash prices to secure volume. Nucor intentionally refused to do that in Q4. So by keeping their lead times tight, they basically starved out the foreign importers.
Right. So importers couldn't just dump their inventory on American buyers. I think management said foreign market share dropped to roughly 15%, which is wild. And despite that restraint, they still shipped over 7 million tons of steel this quarter. That is a completely massive new record volume for their mills.
7.03 million exactly. But honestly, the cash flow turnaround is what probably cemented the rally. Last quarter, we were staring at negative free cash because they've been spending almost $20 billion on capital projects over the last few years. 4 years to be exact. This quarter, free cash flow swung back to a positive $225 million. CapEx is finally coming down again.
Right. The peak spending is receding. So all that invested capital is finally starting to hit the balance sheet. And the funny part is everyone wants to attribute this massive growth to the AI data center boom right now. But Nucor is showing that basic manufacturing and broad infrastructure are actually pulling the cart here. All right, let's get into the details.
Well, if we are talking details, we need to look at what they are actually building for. You mentioned the data center narrative earlier. Everyone just naturally assumes this huge construction backlog is, tech giants buying structural steel for server farms.
Right, because that is literally all anyone talks about right now, AI infrastructure.
Exactly. But the CEO, Leon Topalian, just completely punctured that myth on the call. He specifically said, if you pulled all the data center backlog from Nucor today, it only takes that down about 10%.
Wait, seriously? Only 10%?
Yes. The other 90% is highly diversified. We are talking broad manufacturing, traditional energy, border infrastructure. But here is the fascinating part. While tech is desperately trying to build these data centers, they are running headfirst into a massive power wall.
Because they suck up gigawatts of electricity.
Right. And Nucor is a heavy industrial player melting millions of tons of steel. Energy is roughly 10% of their cost structure, but they are light years ahead of big tech on power strategy.
Okay, so how does a traditional steel company beat hyperscalers at energy? Because it sounds a bit like a stretch.
Well, it comes down to structural paranoia, I guess you could call it. Foresight. They operate electric arc furnaces which rely heavily on the grid, so they are hyper-aware of supply. Because of that, they actively hedge or straight up produce 40 to 50% of their natural gas a year in advance. They're literally drilling their own gas wells, so they completely insulate themselves from real-time fossil fuel price swings.
That's genuinely smart vertical integration. But I thought I read something in the notes about them going nuclear because natural gas is one thing, but reactors?
They are. They are not waiting around for the government to solve the grid. Nucor is taking direct financial positions in small modular reactor companies like NuScale and even fusion startups. And Topalian got unexpectedly intense about this during the Q&A. He turned a pretty standard question about grid costs into a literal geopolitical warning.
Wow. Okay, what did he actually say?
I have the transcript here. Quote, "We recognize that this nation has to re-embrace nuclear. Today, China is building 46 new nuclear facilities. The U.S. is building 0. We have got to change that."
Geez, that is quite a heavy pivot for an earnings call.
It is, but he gets the macro irony here. We want to dominate global AI, but we're too squeamish to build the baseload power to run it. Meanwhile, this legacy steelmaker is quietly front-running the grid crisis so they can keep their margins intact.
It is wild to think about. You have Silicon Valley billionaires begging for power, and a Charlotte-based steel company is just calmly funding the atomic future so they can melt scrap iron.
That is exactly it. It is structural self-reliance. But I do need to point out a slight crack in the armor this quarter. It was not all perfectly smooth.
Okay, lay it on me.
The steel products segment, which is their downstream business, they took a hit to their margins. It's a lag effect. Basically, the raw steel substrate cost went up faster than they could hike prices on their end consumers.
So they're eating the higher input costs temporarily.
More or less, yeah. The raw material spike squeezed them, but management expects that to flip in Q2. Once the contract pricing finally catches up, that margin compression should become a pretty solid margin expansion.
They're basically just waiting for the paperwork to clear to get paid back. So, with volumes already at a record and the pricing expected to catch up, where does this leave them heading into the rest of the year?
Well, if you look at their guidance, honestly, they are incredibly bullish. Management is projecting earnings improvement across all three operating segments for Q2. And for the broader outlook, Leon Topalian actually used the phrase, quote, "pent-up tsunami of earnings power that is yet to hit the balance sheet."
Okay, wow. A tsunami of earnings. That is not exactly cautious CEO speak.
No, it is not. But to be fair, they just spent roughly $20 billion over the last 4 years outfitting these massive new greenfield sites, like the West Virginia sheet mill. And that pain, the peak CapEx pain, is finally fading. They actually expect their internal shipment volumes to push close to double digits natively this year, which is, look, global macro demand is completely flat right now, maybe up 2%.
Right. So if global demand is flat and they're talking about 10% volume growth, they are basically saying they are going to just completely eat market share.
Exactly. It's a total land grab. Through their expanded footprint, plus keeping the tariff line tight, I mean, the import share dropping to 15%, that is the only way all this new capacity actually stays highly profitable.
It really is fascinating. We spend so much time talking about tech disruption, but here is a legacy, like a heavy industrial company, using pure capital discipline to completely reshape its financial physics. It feels like they really earned this quarter.
Yeah, I have to give them credit. The discipline is paying off. I guess the one major thing to watch next quarter is whether that steel products margin actually bounces back like they promised, or if those underlying substrate costs stay sticky. But the baseline setup is definitely strong.
Keep an eye on the paperwork. Well, I think that is a solid wrap on our steel deep dive today.
The structural integrity checks out.
Oh, very nice. We will leave it there. Stick around, folks. We have a quick housekeeping note coming up on how this entire episode was made. If you want these earnings drops to just naturally show up in your feed, tapping the follow button is the easiest way to make that happen. And as a quick aside, we use AI tools to help generate this show, basically turning dense research files into conversational audio. We are always looking to improve, so if you have any feedback or a specific ticker you want us to look at next, just send an email over to earningsunscripted@datamadness.ca. Thanks for hanging out with us today.
Catch you next time.